What's up everybody, another video. It's that time of week again where we look at our technical analysis levels together using our top-down approach, going from the monthly to the weekly to the daily to try to further understand some of the market movements from a chart-based aspect. We'll be taking a look in this video at the S&P 500, NASDAQ, Tesla, Bitcoin, gold, and more, as there's so much going on in these markets right now. This one's going to be good, and we look forward to having you here. Stay tuned. So as we always like to do together, guys, let's have a look at what happened on Friday in the stock market in the US. Basically, it was a sea of a mixture of colors. Look at Intel though, 6.3% down for the day. Also notables, Apple and Amazon also fell off a little bit, and there was mostly a pickup into the end of the day as stimulus talks are kind of continuously grinding ahead of Christmas. So it looks like there's extensions there, and whether they come to an agreement or not is going to be very, very important to the market. We've discussed that before. Take a look at this. Mostly down into the Friday as risk off was coming through, and then all of a sudden we got that extension and you saw a big spike up here in the NASDAQ, S&P 500, and of course Dow Jones. If we take a look at some of the sectors that were actually getting affected by it, it was pretty much across the board things were growing, but we had here XLB out in front. So that is our materials sector was actually doing the best, and then a few others, and XLY, the one that's probably most reliant on the stimulus, the discretionary sector, just still hovering at a 0.5% down. So for now, the sector analysis hasn't really been showing us anything this week. I think that if you look through even the weekly approach, it's mostly been about tech, and that's really been the thing that people have been buying into this Christmas event, as unfortunately the crisis continues to have spikes in terms of the amount of people contracting this current virus. When we're talking about things that people are buying in the markets though, buying Tesla, well obviously people have been doing that, and the addition to the S&P 500 is just moments away. In fact, it's going to happen on Monday, and this has a lot of people very happy. You can see here Tesla up 5.96%, $695, so just under that 700. Now we'll be talking about that one a little bit later on in terms of the charts, but overall Tesla has had a phenomenal year. If you put some things down into perspectives and percentages, you can see here Tesla has gained 731%, which compares with the S&P 500, which is about 15%. So you can really see that Tesla has completely outperformed pretty much any stock that you could have been in other than it or a penny stock of some kind. It's pretty amazing stuff. When we take a look at the CBOE daily market put call statistics, you can see here that they're still hovering around. We've got a total put call of 0.75, and we've got put call ratio on the SP 500, which we look at quite a lot together, at 1.68. If we go into the charts now and have a look at the put call ratio as a line chart, you can see that it has been dropping a little bit, and this is important. Remember, we use it as a contrarian thing on this channel, where if there is less puts opened, it means that it is more likely that if the market is overextended, that it could drop. If there are heaps of puts opened, unfortunately, the market has a tendency to continuously grind higher. So we're sitting at a 0.762, which is a very good level for potential problems in the market to start to surface. And we'll be talking about that a little bit later when we look at the Bollinger Bands on the S&P 500 and a few other things using the top-down approach. So what about the VIX? Well, the VIX, the volatility index, isn't showing us much either. We're still above 20 leading into the back end of 2020 right now. 20 is basically the reading where anything can happen, and we've still got our box structure above this 25 zone. Remember, if this happens, really we are going to be seeing incredible volatility, and I would set an alert for above 25, because if that happens over the Christmas break, due to the lack of trading, which we've only seen one time, I think back in 2018 we saw this, where basically the market didn't have enough liquidity on it, and when it sold off incredibly fast actually for the time, because there was that trade tension going into Christmas. Lack of trading, lack of liquidity caused very big fast sell-offs. So just, I think it's worth having an alert above 25 for the volatility index, but nothing to note when you look through the weekly, monthly at this stage. If we go up to the monthly here, you can see it's just really supported at that 20 and trying to bounce off it. And it's come off some moving averages, but nothing to note, I don't think, here. What about the dollar index? Well, here's the monthly US dollar index. It's got through that 92. It broke below. We talked about that. Eventually, we believe that it's probably going to go down somewhere to this 88.9 zone where previous support and previous resistance were had, and almost a 2050 cross here on the monthly. But if we go through the weekly, you'll then notice it's pretty far away from that 20 moving average. Go to the daily, you'll also notice it's pretty far away from the 20 moving average. But more importantly, we have that 1-2 that we've been talking about in the channel. I'm still looking for this. So that is that any return back to the 20 exponential moving average could be well respected. And that's worthwhile having on your charts and considering when you're looking at these reoccurring events. Remember, statistical or technical analysis is really trying to find reoccurring events based on previous movements in the market and putting as many reasons as possible together for you to be correct. You can even see here that people have been doing this probably on the smaller time frames. We had the 20, the 20, the 20, and then just before the 20 got hit, it found resistance again. So again, this reoccurring moving average that was reached. And you can also see that there was a bit of support here, which was going to act as resistance around the 90-20. So it's that type of thing that if you bring into your technical analysis, can certainly make you a better trader. I think it's something that's very, very important and something I'd be studying and looking at building into your own trading system, possibly in the new year. So here we've got the 90-20. Basically, that's going to be the key level this week that we're going to see the bulls and the bears potentially fight about. And obviously down here, the 89-80 zone, I'll be looking for a close below that to really trigger further selling all the way down, possibly to the 88.9. Basically, we're in the final stretch here of the prediction or the concept of when we thought it broke through 92, it was going to go down here. Now we're just looking at whether it's going too short, too fast, or basically, can we find any market structure that will push it back up? Usually market structure that pushes things back up is something like it comes and tests the lows, comes back up, breaks through, comes back down, and then of course goes on to maybe the 90-60. That's the type of structure that would make a lot of technical sense. And when it hit this 90-60, it's probably going to be reaching the daily 20 as well. Remember, all those synergies together, very important levels to be looking. So let's now talk about Bitcoin. And this has been pretty much the flavor of the month, as in December has all been about Bitcoin, Bitcoin, Bitcoin. We're here on the monthly and we can see that we got as high as around $24,200-ish, if not a little bit more. And this is not only an all-time high, but obviously a very, very, very heavily pressured zone. So I'm on the monthly, and the reason I want to be here is I want to put something like a Bollinger Band on this. And when we put Bollinger Bands on, guys, what we're doing is we're trying to figure out whether the market has moved too quickly and whether this market can sustain this kind of movement. So you'll notice here in the monthly, previous times, 16 to 18, the Bollinger was always under pressure. And this is actually very unique. This is not normal. When you see a market pressuring like this on a monthly, it's almost impossible for it to usually hold up. But I think this comes more into hype of the type of event that we're in. So 1st of December 17, we saw the peak of Bitcoin last time round in 17. We've now seen, of course, this 1st of December 20, which will become the close, obviously being the December period, possibly becoming the peak. And why is this? Because we're going to have a few things. We're going to have Christmas. We're also going to have the New Year, as in the Western New Year. And both of those events tend to draw more retail traders into these particular pairs. And whether we like to admit it or not, Bitcoin is still a relatively small market in the scheme of things in terms of market capitalization. So if we have heaps of retail people going home, telling our families how great we are, what happens? It flows into Bitcoin and alternate coins. So things like Ethereum, things like, of course, XRP, Litecoin, etc. all tend to do well. We've talked about this concept on the channel. If we go back down to the weekly, we can see very, very nice big breakout on the weekly. Again, it's not unprecedented that it can hold outside of the weekly Bollinger for at least a few weeks. So we know that it can do that. And if we go down to the daily, you'll notice here that it's got quite a nice movement outside the Bollinger. And this is probably the one thing I'd be looking at. It seems like during these big moves, the monthly can hold out of the Bollinger, but look through this history together with me. Yes, it has been out of the Bollinger before, but tends not to be able to hold outside the daily Bollinger for too long before starting to consolidate. So that's something that I'm certainly looking at. Let's get rid of this line here. This Bollinger's been pushed out 1, 2, 3, 4 days in a row. It's been super pushed out. That probably leads to some consolidation, but we cannot stop the hype. And that is that after Christmas and after New Year's, generally you will see more money flowing into these markets. And as long as the whales are prepared to hold it for that, we still kind of maintain that we could be looking at a bullish market up into maybe Chinese New Year, where there is always a seasonal tendency for cryptocurrencies to lose some value. Now, if it pulled back, where's it going to? Well, that's the really tough question to answer. I think it would probably be more likely to do some kind of consolidation, but if it was pulling back really hard, it would obviously go to the 20,000. I'm not sure if you'll get there, but that would be where you've got that resistance that would become support. We kind of felt that this would have happened, as in it would have broken through 20,000 easily. If you go back and watch some of the other videos, we talk about that quite a lot, but we have these series of higher lows and equal peaks. And we also have some coiling here around this zone just below the 20,000 on the 4 hour. And all of that kind of leads together to build this hypothesis. The other thing that you can do whenever you're in uncharted territory and you have no idea where the market might be going is potentially bring fib retracements in and then use extensions. So you can extension a Fibonacci like this between the high and the low of the last pullback, and then work out zones that make sense. So maybe the 1.618 was one of them, and then maybe the next one is, of course, where it got to, which is that 23,700-ish, 24,000 zone. And if it ever gets to a 3.618, that's an extreme level. So that would be around 26,000. So usually the market stops at either the 1.618 or the 2618. It doesn't often continue on, but that's the thing with fib extensions. At least they give you a zone or a level for you to look at in the future that might be like, okay, well, does this make sense to my thought process? In Bitcoin and Ethereum, I tend to go for round numbers, so just below 1,000s or 500s, and that's why you'll see here, maybe for me, it was more like 23,000 that was my target, at least initially, and now we actually went over that, hit 24,000, barely got through it, and now we're starting to find some selling pressure. So for the week ahead, I'd be cautious on Bitcoin, but that doesn't mean that it won't go higher. It just means I'd be cautious because I think there's some kind of coiling pullback that could occur. If we have a look at Ethereum, very, very similar strategy on Ethereum. Monthly is, of course, looking really, really, really bullish here. 800 remains that kind of target or zone or area that we're looking at. The weekly, not too much going on here other than it was a very strong break. And when we go into the daily, things become more interesting. Now, we talked about this 620. If we saw a pullback in Bitcoin, what would happen with Ethereum? It would most likely struggle back down to the 620. Previous resistance, previous resistance, previous resistance could act as support. And at the same time, we may have a 20 moving average meeting up with price. All of these things will probably act as support, and you would most likely expect to see some kind of pullback at this area. You can also use Fibonacci retracements off the last move here to try to figure out whether that makes a good zone. And notice here it hits the 38.2. That's beautiful. That's like the triple tick of things that I like to see. 38.2 and 50 fib. It's no secret I like those Fibonacci's, and I use them quite a lot in technical analysis. So let's go on to the broader markets here. Let's take a look at gold. Well, gold has been having a little bit of a pullback after its nice run and nice break above 1850. 1850, this particular zone, for anyone that got this pullback here, very nice. Well done to you. It's certainly a great level. If we take a look at this 1875, we've got a 20 moving average pulling up here. We've got multiple resistances that have been formed recently in price action, and we would hope that this level here would act as some form of support. What are we looking for at this level? We're either looking for hammers, engulfing candles, or things like lightning bolts, like basically a new peak being formed, or little double bottoms, etc. on smaller time frames. What's the next target? 1900, and the target after that, possibly even a 1960. So gold's looking pretty nice right now. Take a look at silver. Silver hit that perfect level, that 26. We've been talking about this for quite some time. Previous support zone, resistance zone, acting as resistance again. We wouldn't be surprised for silver to have a little bit of a pullback here. But remember, 26 is a super important zone for silver. If it breaks through here, where does it tend to go next? 28 and then possibly even 30. Also, if we take the range of this big, what is effectively a channel, what's that going to then extrapolate to? Basically 30. So a lot of things are pushing for silver bulls, and it's no secret again that I've been more of a silver bull on this channel, at least with current price movement, than gold. And that's because silver has the properties that I like, which is real world application use in rebuilds around economies. It is used, it is demanded. And again, go back and have a look at a monthly chart to figure out more about this. If you go back to the GFC and you think about what happened to silver, for a couple of years, not forever, just for a couple of years, it was a great investment. Then it was crap. But that's pretty normal when it comes to the market. It basically has a very nice kind of zone or area that you can target. And then after that, it's knowing your timings and knowing the instrument that you're trading. So let's now talk about broader markets. Let's talk about the S&P 500. We're on the monthly here. We are still pushing outside of the Bollinger. We haven't closed, of course, December yet, but pushing outside the Bollinger for too long is something that historically you know that the market can't do. Look at this. We can go through many years and look how rare it is for the monthlies to close outside the Bollinger and not to have a pullback. And I know this is only one indicator, but I tend to find this works quite well. And this always has me thinking, you know, I know everyone's bullish on the market, and hey, I'm super bullish on the market medium long term. But when you're talking about being outside this Bollinger, let's say we close even more extremely outside this Bollinger, it pretty much convinces me that we will have a minor correction at some point when the market will most likely tend back to the 20 on the monthly. And why is that? Because every time you push outside these Bollinger, it tends to be usually with some kind of touch to the 20 at some point. Now, it's not always exactly accurate, but it certainly does show that when you push outside this Bollinger, there's a good chance it comes back to that zone. And that would be a fairly significant pullback if it was to occur. So we'll keep watching this. We'll keep watching how the price action is teaching us what's going on in the markets. But monthly Bollinger, very interesting. Go to the weekly Bollinger. We're now slightly inside this. Remember, we were pushing it only 2 weeks ago, and we're starting to consolidate at this level, awaiting stimulus in the markets. You can see here the daily big pull up at the end of the day, really again waiting for stimulus in the market. So this is a market that is driven by the Fed, driven by stimulus, driven by basically free money being given out to these companies. And if you don't get that, it's not going to like it. And that's why it's really an artificial market at this stage in many, many ways. If we take a look at what we're looking at this week, we still maintain like really a 36-40 kind of area here. If you were to put a horizontal line and alert at this zone, that's going to be the important area for us to target. And why is this? Well, we've got previous resistances, we've got previous support, and this would be a little bit of double top. I'm sure there's things like MACD divergence here and all sorts of things like that as well. But this particular area, if we came down, got through it, look what else would be hitting. A 4-hour 50, be closing below that, and this would trigger further selling events. Remember, a double top is technically the end of that uptrend and the start of a downtrend. The other things to note is if we make a new high, we'll be in, of course, very, very, very large territory to go to 3,800. Again, you can look at things like Fibonacci's and stuff, but I'm going to look at the NASDAQ more as an indicator on where the markets could go. So let's go over to that one right now. NASDAQ has been fairly decent in terms of patterns. We had the double bottom here that ended up being a very, very nice pull up. We've made a new high. You can see the market is very uber bullish whenever good bits of news come out for the NASDAQ. And again, we're going to use the Fibonacci extension technique to try to figure out where the market might go next. And we're going to basically take that extension, 1.618, just below 13,000. So if we continue this bullish Christmas Santa rally, possibly we go and target that 13,000 on the NASDAQ. Do I like it? Not really, but the trend again is telling us up. And whether we like or we think that it's coming back down or any of those types of things, realistically, that's what the trend's telling us. We go to the daily, it looks pretty bullish. We go to the weekly, it looks super bullish. Very strong close here. And we've got that larger pattern where if we take that distance between obviously the previous peaks and the troughs, we extrapolate that out, that's pushing even more. That's pushing for a 13,400 here in terms of completion of this pattern. So there's quite a few things saying bullish, 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 But the more bullish we go and the more we push outside that monthly Bollinger, especially on the S&P 500, the more likely the correction is going to be fierce on the markets. And it's something I'm very concerned about, and I'll certainly be looking for in 2021. So what about Tesla? What are our thoughts there? Well, here on the weekly, you'll notice it closes around 695. That's pretty extreme. Obviously, it's getting included in the S&P 500, so a lot of people are balancing into it. And also remember, it's got a lot of hype on it. Now, do I think this is kind of the point that it should be at, or it's fair value? Look, we've talked about Tesla a lot, and it's certainly in a massive uptrend. It's hard to bet against this kind of thing. But at 700, you would be thinking it's hitting a psychological. It's just underneath that zone. And I wouldn't be surprised at all to see a little bit of selling pressure come back into Tesla. You notice the 20 moving average here is right around 600. There's a little bit of market structure there. Possibly it pulls back into that because there's a lot of hype right now about the inclusion and what that means and funds getting into it and everything. I tend to find that the hype dies down immediately and then you usually see a bit of a correction as people sell it off or put pressure under the stock or anything like that. So definitely worthwhile watching Tesla. If you're in it, congratulations, but it's $695. Oh, it's a hard prospect to buy in terms of investments at this price, and it could certainly have a major correction at any point in time. On to the economic calendars. Here we've got, of course, what's going on this week. And you'll notice there is really no big news here. There is just a lack of trading liquidity and, of course, Christmas and everything else. And that means, of course, not as much volume trading generally goes on. But when it does, it can be very spiky and very, very quick. So we hope everybody has a great Christmas. We hope everybody obviously has a happy new year. We will still be making video content over this time talking about the markets. Sometimes very interesting things can come up. And of course, we really do appreciate your support in 2020. So for myself and everybody else on the team, we'd just like to thank you guys for your support and of course, smashing that subscribe and like button. We'll see you in the next video and good luck this week, everybody. Bye for now.
We'll be right back.